It's time for the first Friday market wrap of 2021. Happy New Year, everybody. And Roger Scott, thank you for joining me today.
Thank you for having me on, James.
Roger, I guess we go straight to the, let's call it the most geopolitically significant event of, I would say, of the decade, and easily of the decade, since the decade's so young, but possibly of the century, and that's the storming of Capitol Hill by supporters of outgoing President Donald Trump. Markets don't seem to be concerned with that one way or the other. Is there anything that we should talk about in that context in view of markets and investing?
To be quite honest with you, no. I honestly, I mean, I'd love to tell you stories, but first of all, I think what happened was absolutely just, I don't have the words. I don't have the words. It hurts me to see that. And, you know, I look at it and I shake my head and I'm thinking, what planet are we living in? What century are we in? This is madness.
All three administrative branches of the government of the United States are now Democratic in nature, which gives carte blanche almost to the progressive agenda of Mr. Biden and Ms. Harris. What has changed for you in this surprise development where they didn't really gain control of Congress, but they muted Congress in that they can defeat anything with a tie vote, and that sort of puts the House in a power position in combination with the presidential office. So what's the takeaway from that for us, Roger?
Well, there are many different levels to view this as. On a personal level, I kind of like a nice checks and balances between Democrats and Republicans. So I personally, I'm a little wary because, you know, things can go very far left very, very quickly here. And I don't think that would be good for the economy. You know, a little bit too much of one thing is not good. You know, any extreme is not good. And I'm fearful of that. But with that said, and I know a lot of people are going to be shaking their heads. I did some research over the past few weeks, James, and over the last 100 years, you know, the S&P average is about 6% per year return.
Mm-hmm.
When we've had alignments between either the best stock market returns we've had have been on record when you have Democrats controlling the Senate, the House, and the presidency. I know people will be shaking their head in disbelief. This is a fact. This is not a theory. This is not a speculation. The second best environment we've ever had was when we had complete alignment with Republicans. So we know that the best market returns occur when you have alignment, either in Republicans or Democrats, but Democrats actually did substantially better. Now, so for people to think that the stock market's going to go bearish or the stock market's not going to return, no, I'm here to tell you that the best performance we've seen historically has been under the circumstances that are in front of us right now. So I'm not really too concerned about that. Number two, second, I believe we're going to see a separation, much more of a separation between the stock market and politics, much how we've had prior to Trump taking office. Trump did a pretty good job of convincing Americans, and not just convincing Americans by actually putting direct pressure on the Fed to keep the stock market moving before the COVID as a direct result or an indirect result of interest rates going lower and being pushed down. And I want most people out there to know that typically there is not such a great relationship between the stock market and politics as President Trump has suggested. I'll just say that over the years. So that's number two. And number three, I think the overriding factors that were brought on by COVID are going to have shaped the market over the past year with the stimuli and the vaccine. I think the tone of the market for the next few years has been set several months ago, as early as January, February, March, and April of 2020. So I don't think the current administration is going to have as big of a direct impact on the stock market as a lot of people believe. I think maybe over the next, I think when you look back, maybe 6 years from now, 5 years from now, you may start seeing an impact, but a direct impact over the next few years. The story that's unfolding, the catalyst for that story began unfolding a long time ago. As a matter of fact, and I'll tell you, and this is something to prove my point, actually a really good factor to prove my point. Somebody asked me from my office, from the staff of Wealth Press, said, you know, Roger, the market is not really reacting to all this political drama the way most people think it would. And my answer to that is, and I want people at home to really think about this. The stock market, and I've been talking about this the entire time, the stock market started behaving and reacting to this change that we're seeing now as early as the first presidential debate. That's when the Russell started, that's when the Russell, for the first time since the trade war, started deviating from the overall market. That's when the large caps started grossly underperforming the small caps. That's when the evergreen, the lithium, all those stocks started going up. If you look at the trend, at a mature trend that we're seeing right now, it all started at the first debate. That's why what people are looking at now and are looking for all these changes, they should be looking at the time the first debate happened, because that's when the catalyst for all of that began. We're just seeing more of it as a follow through and a confirmation that that's where things are going. But the truth is, Biden is going to do a $1 trillion infrastructure that's going to be focused on renewable energy, sustainable energy, lithium, self-driving cars. I think
Cannabis.
30, I'm sorry?
Cannabis.
Cannabis. We also, I appreciate you bringing that up, because there's another point there that I wanted to make. If you remember when the presidential election occurred, there was a ratification for cannabis to be legalized federally, but people did not make a big deal out of it because no one believed that both sides, that the full gambit would go Democrat. Now we have a real chance to make it federal. I mean, we're not talking 5% chance. We're talking 80% chance, and there's nothing stopping. And that's an industry right there. I mean, we're talking 30, 40 stocks, and I don't have to tell you about this. I mean, you know exactly.
Yeah, our portfolio really popped on the news that the Georgia runoff had been dominated by Democrats.
Right. What about, did you see stocks like TAN or Sol or Neo or
China stocks, right?
Plug. All these stocks they're going crazy.
Yeah. Well, we've seen already that the regulators are rolling back the delisting of the Chinese telecoms on the NYSE as a result of the incoming Democratic slate. So it's intriguing. So that, you know, when you say there's no direct impact by a government, an administration, yet historically a purely Democratic slate is aligned with the best performing years. I think that, you know, the alignment, convergence of those three branches of government under one party's agenda sort of removes any uncertainty about whether a given measure is going to pass that has such a direct impact on investment performance in an industry like cannabis. So I mean, you know, it's interesting because that whole conversation is very nuanced. You know, right. A government taking credit for a market's performance or a president has always been the kind of thing that makes every real investor roll their eyes. But you can't deny that having all executive or all government branches under the control of one party gives them a clear runway so that when they make an announcement of an intention to enact a certain thing, the chances of it failing are very slim. So everybody tends to operate on the assumption that it's a fait accompli and it's going to happen. And so that kind of removal of uncertainty brings asset appreciation on future developments way closer into the timeline from the point of announcement, because there's no question about a conflict at the congressional House level. So
less hurdles, less uncertainty.
Yeah, exactly. And cannabis is probably in this era, cannabis is the purest example of that. The psychedelics, secondarily, Compass Pathways, the leading U.S. psychedelic company, went from $32 to $42 in the last couple of weeks. So there's proof as the Democratic control solidifies. Companies and industries like that are very much democratically driven are going to start to outperform immediately. And that's one of the things that really excites me about this 2021 investment environment.
Yes, yes. There's going to be some more shifts, but the trends we're going to be seeing will be more sustainable because we're, as you just said, there's going to be less uncertainty surrounding the direction by which things will go. But my concern, you see, what I'm fearful that this can go, it's a double-edged sword. I also believe that Biden may do a mandatory lockdown, and he may start a 90-day mandatory lockdown. That's not out of the, if things continue, James, if things continue on the path we are on, I can almost guarantee that there will be a national 90-day lockdown. Or
well, that's certainly not a bad thing, Roger, considering the United States on a per capita basis leads the rest of the world for COVID infections by a wide margin. So, I mean, it's kind of, I mean, that's a welcome development to us as Canadians as the northern neighbors.
Look, the unemployment data came out today. It was awful again. All right. It was awful again. This market needs to, and again, I don't think this is going to be a long-term cool off, but I think this market needs to really cool off and take a breather before moving higher. It needs to shake off the weak hands. It needs to completely rotate. There's going to be massive rotations as early as next week because that's when a lot of the funds are going to get back into activity. We're going to see a lot more rotation out of sectors that were favoring Trump over the long term, and more money being shifted into the parts of the economy that are slated to grow due to the current administration and so forth. But all of this is not going to happen in a day, and a lot of the same infrastructure stocks will continue moving. But again, I'm very, very fearful that that Biden and the Democratic government are going to focus too much on restrictions, which will have a major, major impact, similarly to what we had last March, April, and what I have been predicting on this show for several months, unless the vaccines start coming out. And as of yesterday, everything with the vaccines is slower than expected. I'm here to tell you,
right,
nobody's getting them on time. There's already been delays. My parents, who are in their 70s, needed to make an appointment. They were supposed to get it last week or this week. They're not going to get it for another month. Healthy people are not going to get it till summer. Unemployment rates are going higher today. I think Biden is going to be put in a corner where he's going to have to take some drastic action. So I wouldn't be surprised to see a sell-off that will cause a rotation, weaken the weak hands, strengthen the strong hands, kind of take us back to reality, weaken the commercial real estate REITs like we did, basically a repeat to a smaller degree of what we saw last March. I would not be surprised to see that. And especially on the large cap tech stocks that are grossly overbought based on every sentiment level I can imagine. We're at 11-year high right now on momentum levels, James.
Sure.
11-year.
Yeah, the tech stocks stopped making sense for me long before March of this year. But, we've got, I mean, again, as a result of the unified branches of government, the ability of Biden to push through larger stimulus packages in the guise of modern monetary theory and quantitative easing, those things are extremely bullish for even tech stocks. I mean, historically, tech stocks have been the principal beneficiaries of the stimulus by the hands of central banks. And do you think that is going to sort of offset the negativity you just described? That
not
bullish
so much
sentiment is going to come in and make the sort of compensate for that?
No, and I'll tell you why. because there's another major factor looming, a gray cloud, a black cloud looming over the large techs, and that's breakup potential. Democrats love to break up big companies. So I think when you take that into account, with the fact that they are overbought, and with the sentiment levels, and with the political climate brought in by Biden's administration, who are already they're salivating over Facebook and Google and Microsoft and a lot of other big companies. There could be, and remember
Google,
the market.
they've got my vote to take apart Google. Google's just a monopolistic business destroying machine.
Amazon. So, but my point is, typically these large cap stocks, and we've done studies to show people they don't tend to really expand too much during a democratic climate. They really don't. The smaller stocks, but not large cap techs. If you looked at Amazon and Nvidia during the Obama administration versus a Republican administration, the difference is quite stark. Quite stark. So again, I think that's going to be a bigger cloud. There's only so much and I also think a lot of the money that's going to come out of Biden's pocket, well, that's going to be authorized by Biden. I shouldn't say his pockets, our pockets, but a lot of that money, I think it's going to go to healthcare, renewable energy, infrastructure, and disruptive tech, not overbloated tech. I think it's going to go to smaller or medium-sized companies. I don't think that money is going to make it into the pockets of large tech.
Okay, well, that would be a welcome development. So Roger, then what is the, given the sort of political outcomes that have now crystallized, what excites you most about the 2021 environment?
Well, several things. I think we're going to have a lot of volatility. I think volatility is going to give us opportunity, but we have to be very cautious in how we take advantage of it. Now, I also think for those who are analyzing 2021, they should start looking back to the debate, the night of the first debate. That would be, in my opinion, the first of the year in terms of how the market has been reacting. I think this is more of like a confirmation follow through. That's number two. Number three, I think the best upside, the biggest downside of the kind of market we're going to have in 2021 is there's going to be more risk. But if you know how to take advantage of opportunity, the opportunities that will be there will be clear to find and will be subject to less false breakouts. What do I mean by that? Let me be specific. I think the solar energy trends, the disruptive energy trends, disruptive technology trends, excuse me, the self-driving cars, the mid cap, the companies with a market cap of about 10 billion, 20 billion, those would be the ones I would start focusing on. But again, I think it's going to be, one of the things that I don't like about typical bull markets, and I've mentioned this to you before, is you can have leaders and laggards. And because I use a lot of technicals in my studies, it's hard to measure the true winner or the loser when you have every stock making a 52-week high. But when you have an environment that's a little more challenging and the focus is on a very specific sector or subsectors, you tend to see money moving away from all others and into these. It's easier to find those long trends, those sustainable moves. So I think right now, this is not a time for investors to start thinking too far ahead. This is a time for investors to capitalize on the opportunities that have been moving for the last few months. Small caps, solar stocks, renewable energy, self-driving cars, electric cars, lithium. I think the lithium triangle between Argentina and South America, I think the stocks in that triangle are going to be moving up because they're first source of lithium. And I think lithium is going to be a big market. I've mentioned Albemarle. I've mentioned a few other companies, but I think that's where we have to look. I think copper is going to be a strong market. I think commodities like lumber are going to do well in 2021. But again, I think these sectors that I've just talked about are going to do super well. I don't think they're just going to do well. I think they're going to do really well at the expense of maybe the large cap technology stocks and to a lesser degree, the consumer discretionary stocks that are big, that have not been able to rotate into e-commerce. So I think this is going to be a year where we need to focus on now momentum and not value. There's going to be very little value this year, not before a major pullback, but we're going to have at least 2 pullbacks that'll give people opportunities to buy stocks at a good value. So I don't think you need to rush, but if you want to be in the market now, you want to stay with what's working now and what's been working for the last few months. Don't try to be a hero. Don't try to go into airline stocks. Don't go into cruise ship stocks. Don't try to be a bottom picker right now, because when we have those corrections, those stocks are going to be the first ones to go down. And the stocks that have been moving straight up are going to be the ones that are still standing tall.
All right. Well, sage advice as usual, Roger. We're going to leave it there for now. I'll come back to you and see you at next week's roundtable. Thanks so much for joining me, and have a fantastic weekend.
Thanks for having me on, James. Take care.